How are intercompany activities treated within an NJA or OECD greylisting? So if you look at the OECD framework for this, your BEPS initiatives aims to address tax avoidance strategies that exploit gaps and mismatches in tax. And so one can look at the OECD framework in terms of transfer pricing guidelines, which also exist. And then a very well-known item, which is the country-by-country reporting, CBCR, which exists now for most jurisdictions in terms of the disclosure on transfer pricing and various other income tax-related queries. Your greylisting or jurisdictions that may be greylisted if they do not comply with OECD standards, including adequate implementation of BEPS actions, particularly concerning intercompany transactions. So also be careful of that in terms of the OECD framework. And then if one looks at the non-cooperative jurisdictions, the criteria for listing is this usually are jurisdictions assessed based on several criteria, including transparency. So that's also quite a difficult point and plays also a very important role in this whole process. So if one looks at intercompany activities, which are a critical aspect of both the OECD and NJA assessments, jurisdictions that do not adequately regulate or enforce rules around these activities, particularly in ways that enable tax avoidance, are at risk of being greylisted. And that leads to the point where certain jurisdictions a few years back were greylisted, like Mauritius, and it takes quite a while for them to come off that list, and it affects their let's say, their corporate nature or their status in the larger in capital environment, in borrowing debt and making sure that they investment grade, meaning that certain jurisdictions will not do business with them. So that usually plays also a role in these discussions. So very important to consider this all when one looks at it.